Hey, it's Arun, and I want to do a video on the force index, how I use it, and really good example in the last 3 months or so. And so people who've seen my stuff, you know that the force index is something that I like to use. I like to kind of explain it as well. It's just sort of an interesting tool because it plays into volume. And so here on the GDX, this goes back to we had a big rally 2016. We had this big decline in late 2016, and I want to point to these four different declines. All right, so you have four different declines here, and then into the low. And if you see the volume here on each one, it rises, right? So the volume rises on each decline. Now on this third one, as we look, the volume starts to taper off, all right? And then it actually tapers off into the low. But the force index is actually interesting because the force index continues to decline into this low right here, right? And that is a warning on some level that in some way you're actually not fully done declining. Now, you may get a capitulation here, but since you still have a declining force index, it's not a true divergence. It's a lower low, right? But it's not a true actual divergence. Where the divergence comes is on the fourth decline. And you can see that here's the actual force index, and it diverges here. And that actually ends up being the low. And so in real time, when I was looking at this, I actually didn't get a chance to place this trade. It still frustrates me because it's so not unique, but you get something that's really nice. You get a 1, 2, 3, 4, 5 month decline. You get four push downs here, right here, as you can see them, and then you get an actual volume divergence, but then a force index divergence. And the reason that the divergence happens is that the force index is a function of two things. Okay, so it's a function of the decline in percentage terms and a function of the overall volume. All right, and so I'll just show you the first three. Essentially, what this index is telling us is this decline here is a decent percentage on good volume. This decline here is an even stronger percentage decline, and you can visually kind of see that on even more volume. So naturally, the force index will decline. Now here you have good volume, not more, but you've got good volume, and you've got a big percentage decline. And that's actually what pushes the force index even lower on this third one. But the divergence is really the great part of this trade, is that then you get this push down on heavy volume. It's a gap down, and that's really going to worry people in the market when it happens. But actually, it was a move from 21 down to 18 or $3, which was actually less than some of these larger moves, particularly this top move here and this one right here. In percentage terms, this move was less, and since the volume was actually less than all of the others, the force index diverges, and there's your kind of signal. Now, if this had fallen further down to here, or if the volume had been larger, this would have continued, but at some point you're getting into capitulation. It's a different trade. But really what was interesting was the force index divergence as I'm looking at it here. And in conjunction with this, now I'll show you something else that's neat. Once you kind of understand how to use the force index, you'll see that there are times where you get the same thing on the upside, where you get a impulse move here, pull back again, higher, here, force index confirming, and then there's your force index divergence on the actual high in the GDX right here at 31. Higher high, divergence on it, and that's because no volume on the move, and also probably percentage move that's less. All right, so this is one of my favorites because it is kind of adds in percentage and volume. Now, on the triple levered ETF, you can actually look at the underlying triple levered. See if I still have it. I may have it. Yes, right here. So, on the triple levered ETF, it's the same story, okay? It's force index This is nugget, which is the triple levered. Force index declining, price declining. Suddenly right into here, divergence. So we'll get rid of that for now, and there's your divergence, okay? Now in this case, volume rose the whole way up. But again, this is a triple levered, so there's some volatility things. I'm not too concerned about the volume rising. I care that the force index still diverged, which it did, and that's because, again, this percentage move is not as large as some of these other percentage moves that we saw in the past. This was 35 down to 15 right here, so that's a big, big move. You know, this was 10 to 8. So, sorry, well, at the low 5. Oh, sorry, 8 to 5, right? So about 3, so less. Bottom line is it's less because the force index diverges. It's a less percentage move, even with heavier volume. Okay, it's come off this move. Now, there's one other indicator I want to show you, which is my favorite on top of this when you have these coming in, and that is this timing indicator, okay? So this is the same nugget that we looked at right here. Same sort of GDX and nugget. This is now nugget on the underlying right here. Okay? And you can see the top, and we know that the force index diverged at that top like I showed here. Top in the minors, divergence here. That's what we're looking at here. And here are those 4 moves lower. They look a little different on this chart, but here's 1, here's 2, here's 3, and here's the 4th. And so now you can visually see that this is significantly less than this 3-bar move down, this numerous bar move down, this tremendous decline down, right? But we also had this indicator shoot. And so this is an indicator that I follow very closely. There's 3 iterations of it. Use it on all different types of stocks and on triple levered ETFs. It's not too complicated, but inside the members area and inside the videos, when these do occur, I actually bring that into the conversation naturally. I would tell you that on a standalone basis, this is a good enough trade. In my view, that's already a good enough trade on its own. And that's because you've had at the time such a big decline, and then the force index diverges, okay? That I really like. But when you couple it with knowing that right here, December, as the force index is diverging, I'm also having this indicator spike, okay? And so everything else was short-lived. There was an indicator spike here. It didn't work, and that's because at the end of the day, that was on this one. Still declining force, so it wasn't a divergence. So added a divergence, couple it with some other indicators, and you get these big bounces. And it's not academic. Again, I'm really upset that I missed this one because it was I'll show you on this decline into the low, heavy volume. Look at this hammer. Market traded a hammer right here. Daily candles are very unreliable. It's the last piece of the equation in my view on many different trades, but you can see that the market then held. Even this breakout is a confirmation buy because you know that you have a divergence and you have a spike here in the indicators as well underneath it. So even this breakout is actually a buy signal. And the reason that that's so relevant is, let's say you take it at the hammer, and let's say if not on this breakout buy at 6.5. This has been an easy, really quick double on the triple levered. So I wanted to share that, and I wanted to talk a lot about sort of the force index versus volume, and then show you some of the member indicators that are used as well that help confirm. I hope you enjoyed it, and we will talk to you soon. Take care.